has been EMS. So let's welcome on board Saurabh Gupta, CFO at Dixon Technologies, and try and understand what exactly the budget and, of course, the macro environment is throwing up for companies such as those. Saurabh, great to have you on ET Now.
Morning.
Thank you so much. And, just still analyzing and digesting the budget, tell me, how does the 40,000 crore rupee component incentive scheme change your margin outlook going forward?
Yeah, so we are committing significant investments in the component scheme. Clearly, we will be investing almost 2,500-3,000 crores over the next 3 years, especially on display modules, camera modules. Camera modules, we've already done an acquisition. Displays should be ramped up and should start. We should start manufacturing displays in a new plant by Q2. And we have also there's some telecom product called SFP. So clearly, it's a welcome step by the government. Clearly, the government wants to now, with the initial manufacturing, they want to focus now on deepening of manufacturing on the component localization. So this is definitely a welcome step because this will help in the overall growth of the industry, help in creation of the component ecosystem, and of course, we will be the biggest beneficiary in this.
Okay, do you believe that your allocation or the allocation for phones has come down? Give us a sense of the kind of allocation out of this 40,000 crore that you get.
Yes, so phone allocation is a different thing. This is specifically related to component. So as I mentioned, we are committing an investment of closer to 2,500-3,000 crores. And we have already got two approvals. Two approvals are in the pipeline. So we feel confident that we should be able to leverage this component PLI scheme to the maximum. We already have a large order book in our mobile business and IT hardware business where we are really focusing on these components. And as far as the PLI is concerned, that's an over and above separate budget. So government is definitely engaging with the industry for its extension. To say for sure that will get extended, it's very difficult, but definitely there have been deep discussions between the government and the industry. And it feels like that the government wants to give more support to the sector till the time the component ecosystem gets evolved or gets created in the country.
Right. So Saurabh, just getting a little deeper into the conversation, which component segments, would it be display, camera, modules, mechanicals, etc., are you prioritizing at this stage?
So this camera is already in. Camera, we acquired an Indian arm of a Chinese company called Q-Tech. So that we acquired somewhere in September. Now we are making further investments in the business to deepen the manufacturing, to expand the capacities, which should happen over the next 7-8 months. And the idea is to basically take a market of almost 40-45% on the Android ecosystem as far as cameras are concerned over the next 2 years. We have already been given the approval under the ECMS scheme for camera modules. Display is another project where the plant is already now constructed. Our machineries have been ordered. They should be installed by end of Q1. And the production should happen somewhere in Q2. So there we are focusing not only on mobile displays, we are focusing on automotive, IT hardware displays. And also in the second phase, we'll focus on the TV displays. So these two segments will be the large for us. And also in telecom, we have got an approval for optical transceivers, where of course we should start manufacturing in next financial year, and mechanicals and display approval should come in hopefully very soon.
And what is most margin accretive out of this entire lot?
I think so. All of them will be margin accretive, but largely displays and cameras would be really good margins for us because it will be largely captive for us, captive to our own requirements. And we expect very good margin profile in this. And not only margin, I think so it adds a lot of strength and more to our business. And it makes us globally competitive. So yeah, that's, I think so now our next step is to really focus on this backward integration strategy. And yeah, so it will be really a big margin driver for us going forward.
Saurabh, with regard to that big Vivo JV, what's the kind of timeline that we're looking at? Because it's been pushed for a while now. When can we expect that to come through?
Yeah, so we expect that the approval should come in soon. We don't see any bottlenecks. Of course, yes, you are absolutely right. It has been delayed. So very difficult to give you an exact timeline. But we feel that it is just around the corner and we should get the approval soon. And we are in very deep discussions with the government authorities on that particular front. So let's see. But yeah, we feel confident about it.
Okay. And margin uptick that was, a bit of a surprise, at least the way the street saw it, with regard to your Q3 numbers. Talk to us about the levers you've been using to kind of increase it, or is it just operational efficiency playing out?
Yeah, definitely operational efficiency is playing out, and once the backward integration is in play, which largely will get reflected in 27, 28, the margin should further expand from this levels. Also, we feel that the washing machine business and the refrigerator business, the ODM part of the business has done well in quarter three. There was some slowness, there was some slowdown in the mobile phone business, which is relatively a lower gross margin and EBITDA margin business. So because of change in mix, I would say largely the Q3 margins were in line, yeah.
Okay. With regard to growth, does that, what are the levers that are there with regard to where the top line is concerned? And is the major lever the Vivo deal? And till that doesn't happen, can we expect significant top line growth to continue to come through?
Yeah, so Rahul, I think so. Not only Vivo JV is definitely a large trigger for a growth. It will add a lot of volumes and revenues to our numbers for next financial year. But apart from that, even IT hardware business is looking very promising. We have got all the four marquee brands on board. The order book is increasing. Our JV with Inventec should be operational somewhere in June, July. So there we not only plan to manufacture, one, we are expanding the portfolio beyond the laptops to all-in-one desktop printers with our anchor customer. And with our Inventec JV, at some point of time, we'll get into the servers category, which is very large category globally if you look at considering the investment that have been going in the AI right now. Secondly, our telecom business in the last 2 years have grown from 700 crores to 5,500 crores. We see that there is a huge potential of internet penetration in India. So our Airtel is an anchor customer. So in the next couple of years, we can continue to grow a double digit in that business. We have already got a large order from a US client for non-CP products. And similarly, in our washing machine portfolio, we are expanding into the front loaders category. We are evaluating other categories like kitchen chimneys, microwaves, and refrigerators. Again, we are expanding the portfolio beyond the direct cool to other categories. So clearly, there's a growth all around apart from mobiles. But yeah, mobile will be the largest trigger, followed by telecom and IT hardware, and then other verticals will also continue to grow. Yeah.
Right, understood. So, Saurabh, if I were to just understand things a little bit better, tell me what kind of revenue do you expect from IT hardware over the next 12 to 18 months?
Yeah, so this year we expect our IT hardware to close somewhere around 1,500 odd crores, 1,400, 1,500 odd crores. I think so. Next financial year, it should be more than double, considering the kind of order book that we are sitting on. So it should be closer to anywhere between 4,500 crores. And in next couple of years, we are definitely targeting going to closer to $1 billion in this business. Because clearly, we have put a large infrastructure and we are really investing the capacities. The brands are now significantly looking at more and more local sourcing. So clearly, I think so. This business will continue to show a very strong growth for us.
Now, with regard to QTech in particular, you've already confirmed that QTech supplies camera modules to most major Android OEMs, including the likes of a Motorola and the like. What's the upside here that you're seeing in terms of growth, in terms of opportunity?
Yeah, so if you look at last year, they did almost 40 million camera modules out of a 450 million market. So they broadly had a 10% market share. You're absolutely right. They pretty much supply to all the customers in the Android ecosystem. We feel one, there is a large import substitution opportunity with our investment in that company. With now investment going towards more capacity expansion and deepening of manufacturing, we feel that in next couple of years, the idea of this 40 million, we can take it to 180, 190 million because we already have a large order book in smartphones. So every phone has typically 3.2 smartphone cameras, camera modules. So feel the kind of order book that we are having. So we should take it to 180, 190 million, and the revenue profile can go to almost 5,500, 6,000 crores with a much better margin on account of more deepening of manufacturing. So this is definitely is also looking very, very strong and very promising for us.
Understood. Okay, Saurabh, great to have you on the show. And Paul, good luck. Things really seem to be picking up for you at Dixon.
Thank you so much. Thank you. Thank you.
Okay, that's the word coming in from Dixon, and this has been, of course, one strong